Hello and welcome to The Trade. Before we get to the charts, let's take a look at what's going on at a macro level. And President Trump has launched a US Navy operation seeking to open the Strait of Hormuz to shipping, which has prompted an immediate response from Iran to keep control of the critical shipping route. 2 US Navy guided missile destroyers entered the Gulf to break an Iranian blockade, and the commander of US forces said his fleet had destroyed 6 small Iranian boats, which Iran denied. Iran retaliated, launching drone and missile attacks on the United Arab Emirates, including one that caused a fire at a key oil port, with the UAE saying it's reserved the right to respond. Well, US Treasury yields have jumped high, with the 10-year registering its biggest daily increase in 6 weeks at 4.46%, the 2-year just shy of 4%. Australian 3-year government bond yields at around 4.7%, the 10-year up to 5.06%, with markets pricing in an 80% chance the RBA cash rate will be hiked by 25 basis points today. The US dollar index up around 1/3%. The Aussie has fallen back to 71.7 US cents. Well, let's now get across those key charts with a look at certainly the Aussie dollar also ahead of the RBA decision. Hebe Chen joining us from Vantage Markets. Hebe, welcome to you. Good to catch up with you again on a critical day as far as rates are concerned. So, clearly the Aussie dollar has benefited from the prospect of higher rates. How do you see it?
Yes, definitely. This is a critical day, as you say, that the Aussie dollar do benefit. I do see, as you just mentioned, it's pulled back a little bit, but still the Aussie dollar versus USD still at the highest level in 4 years' time, and have already packing up about 8% gain so far this year. So technically wise, as you can see from the daily chart here, the Aussie dollar is now at a breakout moment. On the chart, we do think that the pair is pressing pretty right up against the resistance within a well-defined ascending triangle shape, formed by the higher highs and higher lows, and both the 20 and 50 days moving averages all trending higher. That package here just tells you the momentum is not just building, it's actually pretty solid. But certainly, as you said, that this critical thing is that what's the next move for the RBA, and that will decide the next move for the Aussie dollar as well. So I think there's two scenarios that could play out today. If the RBA reinforce a higher for longer stance, just as market expected, and at least another two hikes by the end of this year, I think that will help the Aussie dollar to making a pretty confirmed breakout from the 72.40 to even move towards 73 cents. That will certainly come to play. On the other hand, if RBA's tone shows some of the hesitation or less hawkish than markets expected, I think that will risk the pair to turning into a classic buy the rumor, sell the fact move. I think that it's what the pair shows a bit of the cautious early today. That will risk the prices rotating back towards the channel support around 71.60. Where the 20-day simple moving average is sitting right now. But overall, I think from a technical perspective, the uptrend is pretty solid. It's there, but today's message probably will determine that whether or not it will just break out or consolidation before the next leg.
Some key levels there to watch out for, particularly post that RBA decision this afternoon. Hebe, let's turn to equities with a focus on gold. Now, the gold price itself has made a bit of a comeback over the course of the war, but it appears some gold stocks have not followed. In particular, Evolution Mining. What are you seeing?
Well, yes, I think Evolution Mining, as we know, as you also mentioned, that this is a leveraged gold trade. And we all remember how stunning the Evolution Mining has experienced last year. But the prices has seen a sharp 30% pullback over the past 2 months. But as you said, this is more of a driven by gold volatility. That's why I'm putting up the gold prices movement. You can see that's just perfectly just in line with the movement of the gold prices. It's less about the company's fundamental weakness. And you can see that clearly on the chart with the stock prices now the picture shows starting to stabilize while the price still below the 20 and the 50 days moving average. But we do notice that 200 days has always been a pretty strong support for the Evolution Mining's prices. And also we are seeing some early signs of a base formation. There's a potential double bottom beginning to take shape. I'm putting up the two green arrow here. The reason I'm putting a bit of light because I think this is not yet confirmed. The key level to watch, I would say, is 1380. I think a break above the level, which will signal a shift on the selling pressure into recovery, with 1450 as the next resistance. So I think the setup is pretty clear for Evolution Mining. The price is starting stabilizing, the selling pressure starting to phase. So the gold prices, if the gold price stabilizes, I think the Evolution Mining is well positioned, and I think it's ready to lead the next leg higher.
All right, Hebe. So more broadly, gold has. Hopefully we've still got you there. There you go. Gold, underperforming. Whereas relative to Bitcoin, it's quite something, isn't it? Because we have seen digital gold as such do very well. In fact, just overnight, it eclipsed that $80,000 level, retaking that from what we saw in January. And in fact, it's appreciated about 20% over the course of the war.
Yes, I think it's a very interesting topic this year. I think that people are starting comparing that which one's the real safe haven in terms of the comparison that Bitcoin actually seems to benefit from the geopolitical tension this time. The prices after 6 months of decline is starting to show some early signs of a trend reset. It's already 24% up since the war broke out. And on the chart, we're seeing the 20 and 50 moving averages are both trending higher, forming a pretty supportive base underneath prices. A very classic signal that momentum is rebuilding after 6 months of decline, a pretty sharp decline for the Bitcoin from October last year. Apart from that, we're also seeing that the price move sort of within a pretty clean ascending channel as well, with higher lows just reinforcing that the improving structure. Another one I also noticed, and that's why I'm putting a NASDAQ light layer, it seems the correlation between the Bitcoin and the textile is also coming back into play. In the near term, I would say that the rally is now approaching a key resistance area, around about 84 to 85K, and that's critical because that's a previously starting point of the substantial selling pressure. So I think that will accumulate quite a buyer and sellers at this level. So if the prices could overcome this level, I think the chances that door will be wide open for the Bitcoin to regain even above tending to the 90, even 100K. I think that's a critical testing point there. But on the other hand, this level also showing the momentum is getting pretty stretched. So a consolidation around this 84 to 85K is also quite likely at play.
Hebe, thanks for getting across those key charts. Thanks for joining us on Vantage Markets. And that is the trade.